prices of gold have shown volatility in the last few days, but once again it has decreased slightly. Gold prices rallied by over 1.5% in yesterday's session, surpassing the 1,11,000 rupee mark on the MCX following 8 consolidation sessions. The precious metal has regained bullish momentum, decisively breaching the immediate resistance level of 1,10,300. Now in Delhi, it went past 1,15,000 rupees per 10 grams. In fact, touched 1,16,200 just yesterday before settling slightly lower. Now, what seems to be driving this rally in gold, which seems pretty unprecedented, and experts who had believed that perhaps gold is going to settle down at the level of about 1,10,000 rupees or so per 10 grams, now seem to have been drawn back in their defense for the precious metal. Now, there are multiple factors, of course, lead among them being gold continues to be a safe haven investment. And of course, add to that the pressure on the US Fed to cut rates, which has finally happened, but no real news yet on the US inflation. All of these could be issues that could again fuel another rally in gold for India. The timing could not have been worse as India heads into festive season, and at the same time there is also the wedding season which is going to kickstart in the month of November. A lot of factors driving gold's demand, most notably large central banks around the world also preferring to pick up gold rather than the US dollar. Kunal Shah, head of commodities research at Nirmal Bang, is here to take us through A, these factors which are driving the rally, and B, how long are we going to see this rally continue? Kunal.
Yeah, so it's been a big question that now everyone is seeing a massive bull run in gold on account of various macro reasons, and I think the major catalyst right now in the gold bull run market, more than the central bank, it is the ETF demand. If you look at what is happening on the ETF creation in gold, it is at 3 years high. So Western investors, more than that, the Asian investors have been flocking onto gold ETFs, saying that due to the ongoing trade wars, due to ongoing geopolitical concerns, due to ongoing burdening balance sheet of the Western central banks, all of them makes them believe that it is important to have allocation towards gold. And I think, considering the kind of problems we have in the global economy, the allocation towards gold by the investors is relatively very low. So, in a time where there is a possibility of a bond market may destabilize going forward in the Western economies, like every time we see the sign of inflation, the 10-year bond yields, the 30-year bond yields start shooting up in US, in UK, in Germany, in France, in Japan. So this kind of scenario makes investor believe that the gold is the only safe haven, and all of them are attracted towards it and are allocating their funds into gold. So I see this trend continue going forward, and that is what basically is driving gold prices. So all our targets are achieved basically, but I think the prices may remain buoyant in a near term because of the problems the world is facing, and there is no easy solution available in the market.
So, as Indians head into festive season, where gold buying is not just auspicious but also fairly mandatory when it comes to Diwali buying and as well as the wedding season, Kunal, what should they do at this point? Is it the right time to open those family lockers and just trade some of the existing gold rather than entering the market at these levels?
Uh, I think yes. I mean, if you want to buy gold, I would not recommend to buy at these rates. These are very
But Kunal,
at
many
these
would
rates.
argue that this has been the view coming in for months now, and perhaps had they not taken your advice and gone ahead and bought some gold, they might have been in a better position today, wouldn't they?
Yeah, so it's like uncharted territory. See, the thing is, the way things are unfolding globally, it is beyond anyone's prediction. I mean, you cannot predict that what is going to be the scenario 2 months or 3 months down the line. So every day we see a new prices, a new geopolitical front is opening up, the new problem. So now US is cutting the interest rate, and Japan is on the verge of hiking the interest rate. So I mean, there is so much uncertainty in the world, people have no choice but to remain long in gold. So I think there is too much optimism in near term, and I would stick out my neck and say that I would not initiate a fresh buy at these levels.
And for those who are holding excess gold, who had perhaps invested in the immediate post-COVID recovery phase when markets had begun to sort of, inch up and gold prices were a little more stable, do you think it's time for them to cash out? Is this a good time to exit their holdings and make a killing from what they invested, let's say, 4 years, 5 years ago?
Yeah, I think yes. I'm not in advocating that book full profit, but at least part profit you can book because you are sitting on hefty gains, and it's good to book profit at these levels. So if you are having for example, whatever quantity you bought, 50% of that can be booked as a profit.
All right, so perhaps book 50% of your gold holdings as profit is the word coming in from Nirmal Bang's Head of Commodity Research, Kunal Shah. Kunal, always a pleasure having you here with us on News9. Thank you so much for your time.